Bernstein initiating coverage with an outperform rating on 4 key IT hardware names this morning. The firm saying they see big gains ahead for Apple, Dell, SanDisk, and Seagate as AI spending continues to ramp. Those 4 names in the green so far this month. But there is one that is outperforming the rest so far this year, and that is Seagate. Our mystery chart from earlier, it is up 142% in 2025. It's also the name Bernstein says they are most positive on as the intelligence revolution continues. For more, let's bring in Mark Newman, senior analyst at Bernstein. Mark, great to see you.
Great to be back. Thanks very much.
So it's really stunning to say more outperformance after a 142% run so far this year. So what are the major catalysts here, especially compared to its peer like WDC, which you rated a market perform?
Yeah, I mean, if you look at the performance of Seagate versus Western Digital, they've both outperformed significantly over the past six months or so. And so really what's driving a lot of the outperformance is just people are starting to get excited around more data needs that are necessary to power the intelligence revolution. So there's this real data explosion going on right now. Data needs to be stored. So all the storage names, including Seagate and Western Digital, benefit from this. But the real kicker that has not played out yet in the stock, which is going to lead to a lot more further upside, is the technology. Seagate is the leader in HAMR technology. It is the next generation in hard disk drive technology. We think that is going to enable them to drive down costs much faster than competitors, leading to an expansion in margins, which is leading to a 28% CAGR in EPS over the next 5 years. And so I think this, if you consider almost 30% 5-year CAGR in earnings, this stock is still very cheap where it is. So we think there's still a lot more upside for this stock.
So within that memory theme, that AI-driven memory theme, SanDisk is another one. You say it's very underappreciated right now.
Yeah, exactly. I mean, SanDisk just spun out from Western Digital earlier in the year. I think it's not well appreciated. I think it's starting to outperform the last a few weeks. But if you look prior to that, it had been pretty flat. And if you look, in our initiation note out today, we value SanDisk on a few different metrics. And if you value it on a portion of its fab replacement value, it is trading at about half, which means it is trading at less than it's half of the value of the fab replacement cost. It's not putting any real value into the ongoing free cash flow generation and earnings growth from the company. The actual intellectual property in the company is effectively valued at zero. And so we think there's a lot more upside here. They are also benefiting from the intelligence revolution and the data explosion as well, because data is being stored in not just hard disk drives, but also NAND flash. So SanDisk also benefits from this. And, we're ahead of the street on both Seagate and SanDisk in terms of earnings. I think the street is underestimating earnings for both these stocks, and I think there's still a lot of upside for both of them.